Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the opening range breakouts on the major currency pairs for the end of day New York close price action, as well as oil, gold, and the SPY 200. So just coming back to our original premise on the opening range, that 80% of the time one of the highs or lows of that first Monday, Tuesday initial balance will act as a potentially a buying extreme or a selling extreme for the week. Again, so we see Monday, Tuesday set up. Tuesday closed inside of Monday's range. Buyers came in at the low of Tuesday, and traders may have been looking to buy the break at Tuesday's bar back up towards the high of the previous week, and in doing so, traders were then picked up long off Tuesday's high, and we saw that Tuesday's low did indeed act as the low for the week. Okay, so that would have been a good opportunity for traders. Going to the British pound, we saw again Monday set up as an inside bar. So Tuesday morning Perth time, or Monday evening New York time, we may have saw traders trade the breakout of the inside bar, and they were picked up short. So immediately traders who were trading the inside bar, just put this back to the zero, would have been in profit off of that initial break. Now, if we had our opening range trade set up, again looking at Tuesday's low, traders may have traded and been picked up short. I don't say that whenever I see the breakout bar, traders, this is something you need to be aware of. So we now have a bar on Tuesday that's broken out of balance. So it's broken the range of Monday's low, and it's now what we call out of balance. So when we have an out of balance market, we leave that alone. We wait for confirmation from the market of a higher probability direction, because essentially traders could trade the breakout of that bar, but now you can see we've got trapped traders, which is what the market's always trying to do. There were short traders trapped here. The obvious place for those stops would be either above Tuesday's high or Monday's high. So we see the market proceed, and then Wednesday's close would have presented another opportunity, as traders were traders who had patiently waited would see that. We'll just bring this up here. Wednesday's close was well above that 50% level from the Monday to Wednesday low. And again, just looking at where the market has traded from the low of the previous week's range, we know buyers came in. The next obvious place to go is where orders would be above the previous Friday high. So again, Tuesday's low acted as a buying extreme for the week, presented traders an opportunity to go long, and a nice healthy 2-to-1 profit at least there. Looking at the Aussie dollar, again opening range, Monday's high, just pay that. Tuesday's low. I'm not going to worry about talking about correlation or anything like that with any of these markets today. We're just purely looking at the price action. Wednesday's low below Tuesday presented buyers with an opportunity to come in again from the previous week. We see here where a candle, potentially institutional candle, could have acted as a stop for anybody who wanted to go long below Tuesday's low. And yes, indeed, Tuesday's low did act as an extreme for the week, and the market proceeded to be strong in the bullish direction again. Japanese yen, we see small little bar on Monday. Tuesday's an outside bar, so we have Tuesday giving us our high and our low for the opening range. short sellers could have definitely, again, if you're thinking just in simple terms, 80% of the time, one of those highs from Monday or Tuesday will potentially act as an extreme for the week. Traders could feel comfortably going short on the breakout to the previous week's low, as we know there's orders that the market will potentially try and fill. And by the time Wednesday's bar has printed, we're halfway through the week. The market should now have some sort of conviction in one direction or the other. So if Monday, Tuesday's high is going to be our extreme, the next obvious place to go is the previous week's low. And we see the market definitely proceed lower on the breakout of Wednesday's bar. So Wednesday morning, Tuesday, short traders would have been picked up, a 1 hour stop roughly, and definitely a 1-to-1, if not greater, return on that trade. Swiss franc, again our opening range, Tuesday's high, Monday's low, big bar from the previous week, bias in the short direction. Traders would see a big signal with this, traders, is that even though the price action on Monday and Tuesday was sort of small, what's important is that Tuesday closed inside of Monday's range. But if you look to the high of Monday, okay, so we're looking in this area in terms of where those highs are. We want to find a bar to the left that acts as potential support that we could now use as our 1 bar stop. And again, there's a few in this area that could be used off of those lows. Again, we're looking for a 1 hour stop technically that gives us an indication where bulls would be swapping over to become bears. So we have a breakout short trade, traders comfortably reasonable amount of return for the size of the risk. Okay, Canadian dollar. Monday, Tuesday, we got a very strong bearish trend that's been trending downwards for quite some time. But we see Monday, Tuesday present. Tuesday's out of balance. We'll go to Tuesday's high. And again, we can see a bar right off the bat that potentially, I'll just try and slide that in there to show you a bar that potentially is acting as an institutional bar. So even somewhere in the low of that candle, you want to be able to, if you're going to be shorting with the trend, selling high. There's a classic example of selling high and then taking out the previous week's low, and traders would still be in that trade if they haven't already exited for the week. Okay, New Zealand dollar. Monday's high, Tuesday's low. Again, Tuesday's low acts as a buying extreme for the week, and the market proceeds to reverse in the opposite direction. Just to go back to the Canadian dollar for a second, again, just rehashing our initial balance theory. The Tuesday high did act as an extreme selling point for the week, and we see that again with the New Zealand dollar. So far, every pair has demonstrated that. Let's go look at oil. Opening range, Monday's high, Tuesday's low. Tuesday just out of balance, slightly out of balance. The most vulnerable point for a market is when it goes from imbalance to out of balance. We saw that breakout from Friday's low, but if you look closer, we see that the market was ranging all inside of the previous week, and then smart traders would have placed their long orders above the bear bar where obvious stops are placed. So as soon as that market reversed and triggered off those stops, we had a doubling up probably of new buyers as well as buy stops being triggered. So another example of where that extreme is held up for the week. Just giving you some simple information, traders, to position yourself possibly in a high probability direction for trading. And again, just being patient and waiting for the market to sort of show its hand. So again, Monday, Tuesday, assumably no trades on those days except maybe on an inside bar. We see that inside bar again on the SPY. So we see Monday showing up as an inside bar. Traders could have traded that breakout short. We have our initial balance. The market has been moving strongly up, and we can see that Tuesday's low acted as a buying opportunity. And again, if we look to the left, the market, anywhere in this range where we see bears switching to becoming bullish, and again, even with our one bar, our bullish candle here, giving us that 1 hour stop as a technical indicator of where institutional buying or selling could be happening. And gold, to wrap it up, so we've got Monday's high, we've got Tuesday's low, and again just still closing inside of Monday's range, so I'll look to see that potentially act as a limit order price, Monday's low. And if we look to our left, we want to look again for some indication, some bearish bar, and we see that here of where that could be the 1 hour technical stop of where buyers have sellers have become buyers, and we did see that market reverse immediately, head back towards where stop orders are above Monday's high, and again a low risk, high probability opportunity. So traders, I encourage you to print off your charts, go back, go through the ranges, go look at your opening range. What's great about this is that if you're patient, unless there's an inside bar or you have some other reason to trade, for the most part just on the opening range system, you definitely don't need to trade on a Monday. Monday to me is a day where the market can show its hand, and that's an opportunity where they're giving you an indication one way or the other, perhaps where there's bias or where they're trying to trap traders. So again, as I said, print off a lot of charts, go back through a few thousand, and go week to week, bar by bar, look for that opening range, look for how you could have traded it. There's some really simple concepts here. You can use price, and the market will often give you a really high probability, low risk opportunity to enter a trade. Hopefully you got some value out of today's video, traders. If you like it, please share it. I appreciate all your feedback and your questions and your comments, and I'll keep trying to provide examples of some really simple concepts and strategies that can help us all do better in the markets. So stay disciplined, stay focused, work hard, keep your systems very simple, stick to your money management rules, and work on your mindset, and may the markets go with you. Thanks, traders. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.